Let's put the spotlight on the whole white goods space and specifically the companies related to the air conditioners. Of late, what we are getting to hear is that the demand is a little subdued, but what's the outlook going ahead? Let's try to understand that. Let me welcome Mr. B. Thiagarajan, who is the MD of Blue Star, joining us on the show. A very good morning and thank you so much for your time. So firstly, on your earnings, your Q1 saw a sharp decline in your RAC sales due to the unseasonal rains. But how confident are you that the upcoming festive season can offset this Q1 setback? Are retailers indicating a pent-up demand?
Yes, summer season was washed out due to intermittent rains, and so it was a disappointing quarter. But if you go by the past one decade or so, whenever summer season has failed due to pent-up demand, festival season uh, delivers good results. It cannot make up for the summer season, but it will be better. Now, the indication is there is a Independence Day sales is going to commence, then Onam, then Dasra, Diwali, like that. It will go on. Early indications are it is not that bad as we imagined. The demand is good. See, even in the summer season, when we say it is a poor summer season, we are comparing it with the quarter of last year summer, which was a 57% growth quarter. So strictly speaking, if you take a 3-year period, the market CAGR is good. It is in single digit, but it is growing. So I am not so much concerned about the demand in the normal course. But having said that, I think sentiments have changed after the US tariff. So it is going to impact this industry also to an extent is my take.
Okay, and Mr. Thiagarajan, you've revised your FY26 unitary product growth to 10 to 15% from the earlier guided 20%. Help us understand what are the key assumptions behind this lower guidance and what could push you back towards the upper end of the previously guided range.
First thing is that this particular category has arrived at last in the hierarchy of purchase. Now, this is the topmost in the wish list of aspirational middle class, and many people are going to buy. So, by many estimates, we believe that between now and 2030, the room AC market should grow at a CAGR of 19%. And it is not much, strictly speaking, a household penetration of 8 to 9%. Therefore, it should happen. It has happened in other categories as well. Irrespective of the poor summer season in 2025, between now and 2030, CAGR of 19% will happen. There may be a year in which the growth will be 30%, another year it may be only 8% or flat. We are not worried about that. Now, we have gone by every summer impacted year in the past. Eventually, festival season does well, and it results in making up partially for the degrowth in the summer season. There is a energy label change that is coming on 1st January 2026. So therefore, what will happen is there will be people who will end up buying the current label machines, and then when the table changes, there is another set of people who want to wait and buy the new. Both are there in India. They would like to buy the current 5-star. There are people who would like to buy the new 5-star. So keeping all this in mind, the original estimate of 25 to 30% growth will not happen. In my view, it will be between 10 to 15%.
Right, but along with that, help us understand how much exposure does the business have to the US, since you were just talking about the tariffs and the implications, and with rising global trade tensions and the new US tariffs on Indian goods, how do you see this impacting the Blue Star's international business, essentially in the markets where the cost competitiveness is the key?
Fortunately, it is not significant part of the revenue or profit because we entered only a couple of years ago, and this business model is ODM manufacturing, which means we make for other brands in the US. And we are in the process of acquiring customers. We do have a couple of customers to whom we supply specific models, and they are obviously looking at supply chain de-risking, China versus Vietnam versus India versus Mexico, and we are fortunate to have cracked that. Now, again, product development takes a long time, and then you need to scale that. And we were on the verge of scaling. Unfortunately, the trade wars and the tariff delays that execution. So while there will not be any impact, major impact on the revenue, but our aspiration to scale it is going to be passed for some time till such time this issue is resolved. And obviously, a 50% tariff will not make that business viable for our customers there, right? They are not, they are going to pay the tariff. And we do not have that cost leverage to bring down to offset for the tariff. So therefore, till this issue is resolved, we have to figure out what cost reductions we can bring, what cost reductions our customers will bring in, and we have to wait. Our hope is that one day it will get resolved. So the summary is there is no huge impact on the revenue or profitability, but our aspiration to expand our footprint in the United States, there is a pause. We need to look at how this issue get resolved.
Sure, Mr. Thiagarajan. Thank you so much for your time today and for helping us understand what the tariff impact could be and also the outlook for the AC segment going ahead.